Hello, everyone, and welcome to today's ecosystem panel on fintech in Africa. I'm Justin, VP of Ecosystem here at the Stellar Development Foundation, and today I'm joined by four esteemed colleagues, Wiza from ChipperCash, Joseph from DFS Lab, Rick from ClickPesa, and Tori from Leaf Global, who are all here to discuss the fintech landscape in Africa. So they're going to talk about the challenges and the opportunities they see on the continent and in the world in general. They're going to tell us about their companies and their personal journeys. And hopefully they'll even share some advice for budding entrepreneurs. So it's going to be a fairly freewheeling discussion, but we will do our best to incorporate audience questions when possible. So you'll see that there's a Q&A button on your screen. Feel free to use it at any time to submit a question. Before we kick off the discussion, though, we will take a few minutes to allow each panelist to introduce themselves and to give a little context about who they are and what they're up to. And I'll start. As I mentioned, I'm Justin from the Stellar Development Foundation, which is a nonprofit organization that seeks to support the growth and development of the Stellar network in order to increase equitable access to the world's financial infrastructure. So at SDF, we believe Stellar has the potential to have a significant impact in the world. And we've also seen a ton of interest in Stellar in Africa, which is part of why we're hosting this ecosystem panel. Our goal here is to explore the experiences of aspiring companies that are delivering digital financial services across the continent, but also we're seeking to encourage those companies. So in addition to this panel, we're also launching the Stellar Blockchain Bootcamp with DFS Lab in September. We'll talk more about that at the end of the hour, so stay tuned. Now, I've mentioned Stellar a few times now. To make sure everyone knows what I'm talking about, I'm going to use the rest of my intro time to give a quick overview. What is Stellar? At a high level, Stellar is a decentralized open network that connects the world's financial infrastructure. It is a global public blockchain built for interoperability and to further financial access and inclusion. And it does that by making money more fluid, thanks to its speed and scale and ability to represent and transfer value. It also makes markets more open because when financial infrastructure is connected, you have greater geographical and affordable access to markets. And ultimately, it empowers people because it gives them real ownership of the value in their possession. So Stellar is a platform that allows businesses and developers all over the world to build solutions to real world problems. And many of the businesses represented on this panel do just that. They build on Stellar. So enough about Stellar. I will move on and let each of our panelists introduce themselves, starting with Wiza from ChipperCash. Over to you.
Thank you, Justin. Hey, everyone. My name is Wiza Jalakasi. I am a Malawian living between Nairobi and Johannesburg. I am the Vice President of Global Developer Relations at ChipperCash. ChipperCash is a mobile wallet, the largest smartphone-only mobile money service operating on the continent, with coverage across 8 different African geographies, as well as the UK and the United States. And we enable about 4 million users, all of our jurisdictions, to send each other almost $1 billion each and every year. We've got basic peer-to-peer functionality, both local and international, depending on the jurisdiction that you're in. We also enable users to get virtual and physical prepaid debit cards that they can have tied to their Chipper wallet, as well as purchasing some crypto assets, namely Bitcoin, Ethereum, USDC, a few more in the pipeline as we make our crypto trading platform a bit more robust, fractional investing in US stocks, airtime and data bundles across the board, as well as various kinds of bill payments for their respective jurisdictions. We're a young company, 3 years old, but we've managed to grow pretty quickly over the last year and a half. We're now at 160 people. We're building on Stellar's solutions to explore the viability of cross-border settlement with African stable coins. A lot of the cross-border trade that takes place in Africa is intermediated somewhat unnecessarily by the US dollar, and we think that we can take advantage of these stable coins to facilitate intra-Africa trade in a much more efficient and cost-effective way.
Fantastic. Thank you. Next up, we have Joseph from DFS Lab. Joseph.
Yeah, hi, thanks, Justin. Hi, everyone. I'm Joseph, Head of Entrepreneur Support at DFS Lab. DFS Lab is an early stage investor in companies focused on digital commerce. We typically invest in pre-seed and seed stage, anywhere from $25,000 to $50,000. And we work with founders to help them understand their markets, help them grow their users, and also help them, raise bigger rounds in the future. Over the last 5 years, we've invested in companies like Ohova, Pula, Suppliers, OnePipe, and a bunch of other, companies. We also run Sufficient Capital, which is basically an angel club that allows seasoned and new investors to invest, anywhere from $2,500 upwards in companies we're also invested in. So yeah, thank you.
Great. Next up is Rick from ClickPesa. Rick?
Thank you, Justin. Hi, everyone. My name is Rick. I'm the co-founder and director of ClickPesa. ClickPesa is a company operating in East Africa since 2018. We provide a toolbox of digital tools such as invoicing, CRM, and e-commerce solutions, combined with payments to SMEs and freelancers in East Africa. ClickPesa is active in the markets Kenya, Tanzania, and Rwanda, helping local businesses perform better to increase productivity and profitability. Our mission is to simplify doing business for companies in or within East Africa. We've been building on Stellar since 2018, whereby last year we became an anchor on the Stellar network. ClickPesa is a small company around 10 people, whereby most of us are operating from Tanzania, Dar es Salaam. Excited to talk further about Stellar in this panel. Looking forward for this hour. Thank you.
Fantastic, thank you. And finally, from Leaf Global, we have Tori. Tori, take it away.
Thanks, Justin. Hi, everyone. Really excited to be joining the Stellar community again today. You all have been such a source of support over the years, so happy to be with you. My name is Tori Samples, and I'm the co-founder and CTO of Leaf Global FinTech. I am based in Kigali, Rwanda, and Leaf currently operates in Rwanda, Uganda, and Kenya, with goals to expand across the continent and into other markets, eventually, such as Latin America and the Middle East and Europe as well. We are a digital wallet that allows people to safely store and transport their money across borders. Different than other digital wallets, though, we really operate down market. We started with refugees and have expanded into cross-border traders and informal merchants, people that don't have access to the formal financial system. They don't have bank accounts. They probably have a mobile money account if they're in East Africa, but that's fairly limited in that it's very expensive and difficult to cross networks and to cross borders. And so Leaf allows them to store their money over time in different currencies, to send and receive peer-to-peer with friends and family in other countries for free, and they can cash in and cash out from any mobile money number in the countries in which we operate. We've also started adding in things like airtime purchase and value-add services into the wallet. And the best part is that it's accessible over basic phones. So you don't even need a smartphone to use Leaf. We use a technology called USSD that brings the powerful Stellar-based backend, all built on blockchain, into this really low-tech environment where people don't need to know that there's a blockchain behind the scenes. They don't need to understand crypto to use our stable coins, and they don't need to have a smartphone or data connection, internet connection in order to use our services.
Fantastic, thanks. And thanks to all four of you for joining. I think, so at this point, we're just gonna sort of move into a discussion. And I think, again, anyone who's watching, feel free to submit questions via Q&A. We will incorporate them into the discussion when possible. And I think generally, we're here to sort of talk about the fintech landscape in Africa, and to talk about these solutions, to talk about sort of observations that the people on the panel have about what's going on in the world. And I think I kind of want to start broad. And I think the question that I actually want to start with is, each of you have a product that incorporates blockchain, that targets a specific sort of user base. How did you identify that user base? And how did you decide that blockchain was a good solution to sort of offer them? And I guess I know that this will become a more freewheeling conversation, but I think to start with, I will just call on Tori, since she was the last to speak.
Sure, and we might be the most niche market play of everyone represented today, so happy to start. I mentioned that we started with refugees. And this became apparent to my co-founder, Nat Robinson, and I, as we were really digging into the refugee crisis before looking at the technology side. So we identified that there was this gap in the market where up to 80% of the cross-border market in Africa is still cash-based. It's informal. So people are crossing the border with cash in hand, which can be very dangerous. But then it also is just expensive over time. It's inconvenient, and it doesn't allow people to move into the formal economy over time. So we saw a significant gap there. And in looking at ways to formalize that and to do it with a sustainable business, we saw blockchain as a really good option. This was early 2018, so the landscape was a little bit different, but we knew from the bat that, or right off the bat, that Bitcoin and Ethereum were not going to be a good fit for what we needed, because we knew that we would be dealing with small transaction sizes and a customer base that didn't have 10 minutes to an hour to wait to know the status of their transaction. And so as we started digging into different solutions, we found Stellar through a contact of ours actually in Mexico. And we found that it was a really good technical fit. And so we did look at other blockchains for sure, and eventually found our way back to Stellar, started building out the wallet. And during that time, it was interesting to see how the regulatory landscape changed as well and the attitudes towards blockchain. So if anything, I think over the last few years, it's become an even better fit for us, because Stellar makes it so much easier to work with regulators and central banks because of the stablecoin approach that we're able to take using our own custom assets, acting as a by proxy anchor for our wallet customer base. So we work with licensed entities to hold and move funds, so that makes it easier as well. But overall, I think the approach was identify the problem, identify who it touches and their unique needs, and then find a technical solution to fit that need.
Great. Does anyone else have, like, I mean, there's a lot of interesting stuff there, but before we sort of move on to talk about regulatory questions and things like that, does anyone else have like something that they can say, or a perspective on how they selected their user base or how they decided to explore blockchain as a solution for problems that their users face? How about you?
So chime in there. So on our side, we don't actually expose a lot of like blockchain functionality to our users, except for the assets that we allow them to buy and sell and send and receive in the app. And we're adding a bunch of Stellar assets on there very soon. But like, it's more of our operational backend, right? So, you know, in a good month, we'll be moving anywhere between 80 to maybe $150 million a month across African currency pairs. It is very expensive to try and do a conversion to US dollars and then like convert US dollars back into whatever like destination currency that you actually have. So like I can give you an example. One of our most popular corridors is Uganda and Nigeria both ways, right? One might not typically imagine that there's quite a bit of cross-border trade that takes place between those two markets, but our data seems to suggest otherwise. So we can find ourselves in a scenario where today we have way too much Naira in Nigeria. And the other day we have got way too much Ugandan shillings in Uganda. How do we quickly move money around across these currency pairs such that we are not unnecessarily losing money by doing unnecessary conversions to the US dollar at typically unfavorable rates? So you'll find that like most Forex bureaus, Bureau de Change banks will not have like an exchange rate for the Nigerian Naira to the Ugandan shilling. But if you look at stablecoin pairs, you can find either a direct conversion rate between the two currency pairs, or a currency pair that's like a lot more cost efficient than translating to the US dollar, typically something like USDC. So it started making a lot of sense to us very early after encountering this problem that stable coins might be the way to go here. The biggest challenge, of course, has been around getting our partners, and we work mostly with banks in many markets to be able to move money around. Getting our bank partners to have a high degree of comfort around stable coins and how those stable coins are backed has been a bit of a challenge, though we've been able to make a lot of headway. And I think the future is promising. What's most encouraging for me about it is that once the regulators and other stakeholders start to understand the cost benefits of using this approach. And once they see some examples at scale of other countries and other jurisdictions where there's been a common sense regulatory framework that has worked and has not collapsed or created some degree of chaos, it's very easy for other countries in the region to adopt and copy that sort of model. And I think it will be a much more different landscape in the next 3 to 5 years across the continent.
Great. I mean,
Yeah.
Rick.
Yeah, for us, it's been quite. We also don't really showcase it to the user. So in that sense, it's a similar situation and similar reasons as Chippercash and Leaf. I wanted to add there that one of the reasons we chose the Stellar blockchain is also I mean, obviously the vision of the Stellar Development Foundation, which we felt very aligned with, but also a lot of action, which is also quite important. So I think SDF has been, over the last couple of years, put a lot of effort behind building a good ecosystem. So whether it be anchors, wallets, traders, more and more parties are coming to the ecosystems, and the operations that the Stellar blockchain offers, therefore, are getting quicker, more efficient, and it also makes it cheaper, and that all in a decentralized way. Like one example is, for example, adding off the USDC Stellar asset, which was added earlier this year. These are all great developments that make the ecosystem much better, which benefits everyone that interacts with the ecosystem. And yeah, that's only getting better. So that has also been one of the reasons for us that we went for the Stellar blockchain.
Great. We're getting some good questions in the Q&A too, and one of them sort of touches on something that's come up a few times, which is basically regulations. And the question from Peter is, how have the participants found complying with the travel rule / wire transfer regulations and demonstrating this to regulators and banking partners? So a question about the travel rule and wire transfer regulations. Are there challenges in complying with regulations? Is that one of the big challenges that you face? I guess, Rick, maybe just you can answer that one since you're on the spot still.
Sure. Yeah, the countries we are operating, the cryptocurrency regulation is all very young and non-existing. So we've taken quite a pragmatic approach to it, and do the trial and error approach. So for all use case, we are an anchor on the network, issuing tokens, which people can buy or sell, and that fitted for us in existing regulation, and yeah, to be able to buy and sell, you need a bank partner. So we also regularly like sit with them and see how to adjust how we approach regulation or compliance or AML around this.
Does anyone else want to speak about sort of regulatory challenges or just regulation in general? Tori, it looks like you're ready to go.
Sure. Yeah, and only because we get to have this conversation like 5 times a day with everyone, right? It's the first thing that anyone asks about when they hear what we're doing, especially if we mention refugees, just because there's a stereotype there. But we put all of our customers through stringent KYC and AML checks at onboarding, and then they're able to do transactions within the system. But of course, there are limits on that. So I think one of the advantages of building in Africa is that widely there has been some regulatory treatment of e-money in the last 10 to 15 years. starting with M-Pesa in Kenya and then expanding into mobile money and mobile banking across the continent. And so when we approach regulators to say, this is what we're doing, this is the approach that we're taking, this is a digital representation of value that is stored and held with licensed financial institutions in fiat behind the scenes, that sounds familiar to them because it fits the framework that they have for mobile money, for example, in East Africa. So I think that we've found a lot of success using that approach, and it's definitely part of our growth strategy to identify areas that the regulatory treatment of LEAF is going to be favorable. I think that is changing globally, and it's probably going to be a while before every country has explicit regulation on blockchain or crypto-based digital wallets. But I think in the next 5 years, there probably will be some sort of framework for e-value generally. And so again, the way that we do that is very important for our long-term success. It's not just because there's a framework here, anyone can succeed. I mean, we've put a lot of thought and intention into the design to make it work for the existing frameworks, the potential for change over time, and working within the maybe informal political relationships of the existing landscape, because it doesn't, at the end of the day, it might not matter only what the law says, it matters who's already in the space and what they're doing, how they're being treated. And so making sure that we can play nicely with licensed commercial banks, telcos, PSPs, payment providers or payment processors, that's all very important to us. And so our solution is very much meant to play nicely so that we can get traction with existing financial institutions and regulators. Because if it only works at the tech layer and it doesn't work in the real world, then it doesn't work at all. So I think that's been our approach in all of that. And it seems to be working well so far, at least in East Africa.
Yeah, so just to follow up on Tori and Rick, we're seeing like more, will I say, a kind of opening up, right, of regulators. So in Nigeria, where I live, for example, there was the brash, kind of ban on just general crypto activities, and almost to an extent of making it almost in a way criminal. But then earlier this month, we've seen the CBN, the central bank, say they're working on a central bank digital currency, which to me is kind of positive. It seems to be like there's some engagement with stakeholders, and then they're beginning to understand how this works. And I expect that we'll continue to see that across, multiple governments across the continent. It might not be like easy over and as smooth as we would expect it to be, especially in countries where you don't have the framework of mobile money or e-money, for context, right? And so, well, I believe it's going to be with the work that is being done by, lots of the companies like Chipper Cash, like Live Global, we'll probably see more friendliness from regulators over the coming years.
Wiza, any insights on regulatory compliance and the challenges involved, hopes, plans, dreams?
Yeah, I guess there's two parts I'd want to think about. The first was in reference to like the travel rule. So we've been fortunate enough that like a lot of our transactions fall under the FinCEN threshold limit, which was previously, I think, $3,000, is now being proposed to be as low as $250. A lot of our transactions are typically below that amount, but higher in frequency. So, you don't have to be as stringent when following that. Though we do have like the infrastructure in place to be able to pass on all of the relevant parameters regarding the transaction. So, the address, the name, transaction amount, the stated purpose, etc. So we can pass that programmatically as parameters to our payment partners when they're processing, so that they have a record of all of these informations as and when the transactions are taking place. So it's actually not that hard in terms of being compliant. What is challenging is that the regulatory frameworks are highly fragmented across markets. So you need to set up like a separate compliance structure in each and every country. Like of the 160 people that are working at Chiprecast today, about 60 of them are in the legal risk and compliance team. And this is like a very software heavy service. Like we've got like 40 engineers. So you can imagine how seriously we take that. And we found that engaging the regulator early, a lot of the times we have this almost perspective that the regulator is not pro-innovation. They want things to stay the certain way or that they don't understand. I think that's not the right attitude to approach conversations with the regulator. Like there are people just as smart as you and me sitting in the office of all of these central banks, but then their incentives are very different from ours. And what is the most useful approach has been demonstrating technical mechanisms which satisfy the requirements and the interests that the regulators have. We've been able to set up this cross-border wallet in South Africa, one of the most strictly regulated financial services markets in the world, by taking this approach to say like, okay, guys, we want to do this thing. We know that no one has done it quite like this before, but how do we make it happen as opposed to the law says we can't make it happen, So I think by taking that fragmented approach and investing in those relationships early, you'll be able to set up and scale quite quickly in some of these markets. There's another question that was asked by Afolabi in regards to crypto, saying for crypto-related companies like Chippercash who allow users to use BTC on app, how do you comply with local regulations? So it's about understanding what the state of the regulation is in that market and adapting as and when things change. Before the Central Bank of Nigeria directive, we allowed all of our users in Nigeria to transact. We've since disabled that functionality for those Nigerian users in order to comply with the new regulation. In markets like Uganda and South Africa, where you don't have an explicit prohibition of crypto, we're able to run the services, and we are actually trying to help to formulate some common sense frameworks that enable the regulator to regulate crypto effectively. And even in markets like Nigeria, it's important to note that the prohibition was, it is not illegal to own or hold cryptocurrencies, but the central bank did instruct centralized exchanges to not connect to the centralized banking systems. So there's been very interesting ways that people have gone around that, sort of like setting up digital and physical agent networks. And we're exploring some of that in some of our markets to see whether it might be a viable alternative.
Yeah, it's interesting. I mean, one thing that I'm thinking about as you're telling that story is that you have to be able to adapt to sudden change, right? You don't necessarily know what's coming next. There's a lot of uncertainty. And as new information comes in, you have to sort of figure out where to steer, and you have to be pretty nimble. So I guess one thing I'm curious about from all of you is like, what is the sort of most unexpected thing that's happened as you've been building your company? And how did you respond? Anyone got a story? Yeah, there we
go. Tori, do you want to go ahead? I saw you come off mute.
No, go ahead. Go for it. Thanks.
Yeah, so there have been like several scenarios where, especially in our earlier days, when we were like operating in certain markets and we didn't have a very mature compliance structure, we'll be having the time of our lives, all-time highs, incredible volumes, and then your partner processor just calls you and says, we've received a cease and desist letter to shut down your services immediately. And it's like at 2 a.m., right? And like, there's no explanation, there's no negotiation. There's like, yeah, you can come and talk about it next week. But like right now, we're ceasing and desisting this because we don't understand exactly what you're doing. And this has happened to us quite a lot, especially in the year 2019. It's really been a function of not like really having the right relationships and having the right structures in place to manage these adverse events as and when they occur. Something that is a bit counterintuitive, it's a bit controversial, but I'll still say it anyway. It's my personal belief that a lot of the people in power, sometimes the people in positions of power, they might not be there because they like meritocratically earned that position, right? They're not like the absolute smartest people to be sitting in that role due to some other factors. Maybe there's like the president's cousin and whatever else. They're sitting in some, really important position in a central bank or something. Now, that individual does not necessarily have the exposure and acumen to be able to assess the viability of your business purely on merit, right? And that is like a fundamental reality of the structures and institutions that we have in Africa today. A lot of people seem not to pay attention to the fact that African republics as an idea are about 50 to 60 years old. And you're applying frameworks and regulatory structures from countries that have had institutions for hundreds, if not thousands of years. It doesn't really work the same. So in a scenario like that, in that type of environment, it is really, really important that you know the right people in every country, such that when you get flagged for doing something, those people are able to make a case on your behalf to help the other people who might be in positions of power to understand that you're not actually trying to break the law. You're trying to introduce a new level of innovation, which is compliant, which is actually helping some of the government and the state actors to achieve their intended targets. And that is a lot easier said than done. But I think, investing in relationships and making sure that you're always communicating preemptively has been very, very useful in helping us maintain this type of business across the continent.
I'm going to jump on that because that's our experience, at least the first part as well. When a partner just calls and says, we noticed this growth on your system and it's become big enough that it's been flagged by our partners, and now we're going to have to put a hold on everything until we understand exactly what's happening. And the reaction, of course, on our side is, well, we've been through compliance, we've been through these conversations. This is not a surprise. It's great that we're growing that fast, that we caused a blip in your entire system, but that shouldn't be the conversation we're having today. And so I think that for us, it's been a matter of intentional duplication within the system to make sure that when that happens with one partner, we can very quickly adapt and shift to another. And so making sure that we are truly an integrations hub with lots of options to keep our operations going and to provide flexibility for our customers is really important. And then the other thing that I would add, I think the relationships point is spot on. Those always help no matter where you are. But also, I think there's this gap where, again, it doesn't matter at the end of the day. Well, it doesn't only matter what the law says or what the regulations say. It matters who is looking at those and how they're interpreting them. And so before we go into any market, spend a lot of time looking at the regulatory framework and what exactly we can do and can't do. And we make sure to comply with that because we want to be able to serve customers and we want to be able to operate and we want to stay within the law. But if you get somebody who is not in a position where that's part of their day-to-day job and they don't understand exactly what we're doing, they don't understand exactly what a blockchain is, perhaps behind the scenes, it's always a big buzzword, that can set people's risk factors off. And so if that person is the one who is tasked with deciding somebody's fate, they usually are not the ones who want to stick their necks out on the line. And so making sure that we understand exactly what the law says and we're able to communicate that effectively to people who probably should know it but really don't has been a big challenge for us. And I think we're getting better at it, but we still come across it all the time.
Yeah, it's interesting. I mean, well, Joseph or Rick, do you have anything to sort of add on this topic? Anything about the biggest surprises, how you've dealt with them?
No, for us, it's been similar examples, similar figures of shutting down an account, and I think especially for fintechs especially in Africa, is that it's quite important when the product is evolving that you keep flexibility in your product, because those things are unfortunately there, and if you can't respond quick enough, that means it can kill your business for a while. So flexibility is definitely something you need to have as a fintech.
Yeah, definitely. So in an area in a former life, I was the co-founder of a fintech, and these experiences are very very similar, where you have partners just basically in our case, we our customers just couldn't do a transaction anymore, a certain kind of transaction anymore. And then, we reached out to our partners and like, oh, we cut you off because, this, the central bank reached out and so, yeah, it's being able to, have multiple partners, constantly, like Wiza said, constantly build relationships with both regulators and your partners such that, it's easy to overcome, times like this. But yeah, generally they'll just always come up. You almost can't avoid them.
Yeah, I guess this is also sort of a general question, right? If so far we've sort of been talking about the solutions that you built and the customers that you serve, but I think there's also people in the audience who are sort of budding entrepreneurs who are interested in hearing about your experiences actually building a fintech and being able to like sort of respond to unexpected circumstances, to be flexible. That seems like part of it. But I guess I'm also interested in any advice that you would have for someone who's interested in starting a fintech company or who's interested in scaling one that they've started. Like what's like sort of is there a number one thing that you would suggest to keep in mind if you're trying to build your own business?
I can mention a thing. It doesn't only fit on fintech businesses, but for starting businesses in general. Don't try to be everything and do everything. And I think in the fintech it's more important because you need to tick off quite some boxes like regulation. You need to have a partner if you're doing anything with financial activity. Often, you need various of elements in your business to get it to work. And I think what is important there is to really look, okay, what is your core business? Like, where are you good in as a starting fintech business? And try to outsource as much as possible. So yeah, don't try to build your own KYC AML solutions. There are multiple players in the market. And that's for those other activities as well. Try to focus on your core, and utilize existing solutions in the market. Of course, that's a little bit different when you grow, but I think it's very important to do that in the beginning.
I think mine would be similar to that, along the lines of the core business theme. I think I would just say for someone starting fintech or otherwise, but especially fintech, know the details, because there's so much that technology can do these days that we often forget why we're doing things or what we need to really be successful. We see success stories in the news every day, and it seems like you could throw any tech solution at the wall and something would stick. But I think that especially for fintech being in a highly regulated space, especially for building in markets that might not have as robust of an environment, whether that's Africa or somewhere else, it really does come down to knowing the details. So knowing the details of your customers and their UX UI preferences and their needs on a day-to-day basis and their comfort level with technology, knowing the regulatory landscape, knowing your partner's comfort level with risk and any stipulations that they might have to adhere to or that they might be under. So I think that the details are where it can fall apart or succeed greatly, but knowing them enables you to set up a business that has a much higher chance of success and then be able to effectively defend those decisions over time. Because if you're building in the fintech landscape, you're going to have to defend every single one of the thousands of decisions that you make on a day-to-day basis to potential investors and partners and regulators and customers and anyone else who touches your ecosystem. So I think as much as you can know and be able to defend that, the better.
Joseph or Wiza, you want to touch this one?
Well, very similar. it's like Rick said, it's beyond just fintechs, right? It's basically knowing your your product, knowing what you're trying to build. I I think one of the best ways to put it will be to build the product first before the business, right? It's a bit tricky in a fintech, especially with regulation and stuff, but it's mainly, in a way, I believe that you have some room to ask for forgiveness, before begging for permission, right? And so for as much as you can play, I'll say, just make sure that you have a solid understanding, like Tori said, of the product you're trying to build, of your users, of what they want, of what is really important to them. And in the same vein, almost at the same time, work on building very strong relationships with, partners. Your relationship with partners will probably, in many cases, make or break you. It's very important that you make sure that those relationships are strong. And in many cases, they'll protect you, especially if you're a fintech starting out. Most of your partners are probably going to be the ones to protect you from, heavy hits from regulators, right? So making sure those relationships are, are really tight. And I think Wiza referenced, kind of finding out what their motivations are, and then, working around those, just as opposed to, and beyond just regulators, just your partners, know what your partners' motivations are, and make sure that, you're working with them, to achieve whatever they also want to achieve while you're achieving what you want to achieve. So basically, yeah.
Wiza, anything to add?
No, I think between what Tori and Joseph have shared, they have captured all of my ideas.
Great. I mean, one thing I think about as you're discussing all of this is, I think, okay, the Stellar Network is a great backend platform for sort of storing and transferring value. And ideally, in my mind, sitting here at the Stellar Development Foundation, I imagine that all these different organizations, ecosystem participants would build on the network and be able to interoperate, right? To be able to work with one another, to forge partnerships, to make payments across borders and across currencies. But I also realize that that's a sort of, that's my utopian vision of how Stellar should work. And I'm curious about your views on interoperating with other people in the Stellar ecosystem, or in sort of the fintech ecosystem in general. How important is it that your sort of solutions that you're building play well with others? And what are the biggest, do they currently? And whether they do or not, sort of what are the biggest challenges to interoperation?
I have a bunch of thoughts on this one. So I think interoperability is the next big barrier for digital financial services across the continent. We have seen relatively high penetration in terms of especially urban centers, but we still have a long way to go in digitizing finance, right? Network International, who operates probably the largest point of sale terminal network for banks across the continent, their latest data from last year indicates that 93% of transactions across the continent, retail transactions, are still in cash. So all of this fintech we're doing is lovely and the volumes are impressive, but we have a long way to go. That's one. Now, another side of that bucket is that different countries have got fragmented solutions on a per country basis. So even in individual markets, native interoperability is not yet where it needs to be. There are a few notable examples. Tanzania has got really good interop, Uganda, so and so. I'm not sure about the latest in Rwanda. Maybe Tori can chime in there, but there's still quite a lot of work to be done on a national level. Once we have the national systems, all of the digital financial systems interoperable, and I'm pleased to see that over the last 3 years, a lot of the bank and mobile money interoperability problems in East Africa and Southern Africa have been solved quite well. But once we have that national interoperability, the next question is now around international transactions interoperability. And it was, I think, actually this week that Afri-Exim Bank is piloting a continental payment system that is going to be used to facilitate a trade of intra-Africa currency pairs, like the ones that I described earlier. This is consistent with the African Continental Free Trade Area's policy towards unifying Africa towards a single market. So I do think that, like, interoperability is probably the most important thing we have to do at this stage. It doesn't matter if, my money is sitting in Chipper and Tori has hers in Leaf. Why can't I send my money from my Chipper wallet to Tori's Leaf wallet? We both support the Rwandan franc. We both support the Kenyan shilling. We have a long way to go. Some of the standards that are being developed, such as Moja Loop, could be something that's quite exciting, but again, they're targeted towards specific verticals. That is the telco industry. We're over the top financial service players. If we don't do interoperability, we'll end up with a scenario where you've got mini monopolies in various regions, which is almost the status quo to date. So definitely something that needs to happen. I think that blockchains are an obvious solution towards interoperability. I just haven't seen, I think that the biggest barrier, the technology exists today, but the biggest barrier is fintechs in Africa don't have like a unified association the way the telcos do. So Moja Loop is being pushed to the telcos through the GSMA, which is the industry association. I think the first thing we need to do is unionize and bring out an association of over-the-top of financial service players, and then agree on what sort of standards we're going to use for interoperability. I don't think it's been as much of an issue in other markets because Europe has got the Eurozone. So if the currency is natively interoperable, you don't have to worry. The United States is a single market. China is also a single market. India is also a single market. But we compare ourselves with these regions. And meanwhile, we are 54 very distinct and very unique countries with unique needs, challenges, and opportunities. So definitely, I think the next unicorns are going to be interoperability platforms out of Africa. And it's a fantastic opportunity for those who are willing to give it a shot in solving.
I completely agree with that. I think the fragmented markets that you mentioned are the biggest opportunities as well. So if the telcos are not going to solve that, in Rwanda today, it's very difficult to send between MTN and Airtel. If they're not going to solve it for themselves because of the competition between those, then that's an incredible opportunity for somebody like Leaf or Chipper or other fintech plays to come in and solve it for them. So I've been excited to see that there are definitely companies stepping into those gaps. I think they've started at the business level, so the B2B plays. That's been a lot easier, and then hopefully the benefits of interoperability and bridge plays will come down to the consumer level over time. That's where Leaf is trying to play, of course, and we see significant opportunity there. And I genuinely hope that others will come into the space as well, because it is such a fragmented market and there is so much opportunity. I think one thing that is a potential barrier to interoperability is the word itself. And so I don't know if it's helpful just to start with talking about integrations. Everybody loves integrations, right? They're easy. We know how to do them. They're very accessible for most companies. And so if instead of going into a room full of people and saying, hey, let's all become interoperable, if it's having those conversations to say, how can you and I integrate today? And over time, that creates a network. Fantastic. It'll help us get there. And so for myself, I look at it and I'm like, well, great. We already have assets for Rwandan francs, Kenyan shillings, Ugandan shillings on the Stellar network. That's very easy for us to push into Chipper's wallet, for example. So, if we want to have a conversation after this and talk about what that looks like, great, because we already have that asset. I think that my fear in this is that we keep abiding by the same playbook over time. And so it's, Leaf created these assets because we didn't see anybody else out there who had them. But that could also be justified for other companies coming into the space. If they're a new company in Rwanda that wanted to have their own Rwandan franc coin on Stellar, they could do that. It's unnecessary. They should just use ours, and we should learn how to play nicely together. But I understand the business reasoning and the fear that could create that landscape where everyone just continues to do their own thing. So I think we are very, very pro integration and very pro interoperability. Stellar is a good tool for that. And I think as the network is still fairly limited in Africa, but it's growing. And we hope that by sharing our experiences and our lessons learned, there's been a lot of them, potentially we can help other players coming into that space as we're growing ourselves, because of course we're still very new in the game as well.
Great. I mean, Joseph, do you have something to add to that?
Yeah, so I really like Tori's point on integrations. That's actually, that seems to be like a more kind of like friendly approach. One thing, so Wiza talked about Mojaloop, and so I've been kind of involved with that movement for a bit. And one of the issues you see is many startups that should adopt it or are looking to adopt it realize that, for example, you probably need to have like a switch, right? In Nigeria, it's going to cost you a lot of money to have like a switching license, right? And then you have this thing where the startups say they want to come together and then build like one switch that they can use to connect to like, Mojaloop in another country. There's like all that kind of complexity around it. And so just starting with integration seems to me like a very fair approach, as much as possible. If lots of startups, put together, they expose APIs like to connect to each other, then maybe that would be like a great start. And then we can start talking about, connecting across different borders like countries. So that sounds very, plausible to me.
Yeah, I wanted to add to that it will be interesting to see a couple of players in the African market that actually try to become such central switch. For example, MFS Africa is trying to do that. And then on the other side, you have, of course, Stellar, which is trying to achieve that in a decentralized way, with as a non-profit having a certain open source standards. It will be interesting to see, which way it's going to lean, whether it will be more a central party or it will go decentralized. And I think it will take a bit of time, but I expect that at some point it will lean more decentralized on, for example, Stellar open source, having open source standards, than actually a central party. Or that's at least what I hope, because if it becomes a central party, one or two players, then it's the question whether it really becomes cheaper.
Great, thank you. So I personally feel like that's a great place to end, this sort of dream of hope that these standards for integrations become, sort of tend towards the open source. Of course, as someone at the SDF who prizes sort of the open source culture and believes that this network should be permissionless and owned by everyone and easily accessible, and that we should work together to create similar standards rather than having one single party own them. That sounds great to me, and I would love to see that happen. But of course, what is interesting is that what happens next is up to the people here and the people listening, people in the world in general, the people who are building businesses, and also to their users, like what is going to succeed. And I think only time will tell. But at this point, I do want to take these last few minutes because, as I mentioned at the top of the presentation, or at the top of the panel, we, the SDF, are working with DFS Lab to sponsor a boot camp. And I just want to take these last few minutes so that to give some information so that anyone listening understands what that means, what it can do for them, and how to apply. And so I want to thank everyone for their participation. Thank you so much. And pass it over to Joseph so he can tell us a little bit about the boot camp.
Yeah, thanks, Justin. So DFS Lab is working with the Stellar Development Foundation to kind of open up an opportunity for early to mid-stage startups who are interested in building a solution for on Stellar, who are interested in building on Stellar for Africa. We are looking, at basically it's a block. The bootcamp follows like a design sprint approach, where over a period of 3 days you go from idea to prototype, in where you follow a bunch of steps, right, to go from idea to prototype over a 3-day period. And then we have a demo day on the 4th day, where startups or participants can win, anywhere from 5,000 to 20,000 USDC in prizes. So the most promising startups, during the event. And there are also opportunities for follow-up funding from the Stellar Development Foundation Enterprise Fund, and other investors who be at the demo day, right? And then it's kind of open to fintechs, open to companies that are currently building on the blockchain, and then companies that are just thinking of it, like the way we refer to them as crypto curious companies who are building in Africa. It's open to any of those type of people to apply. You can visit the websites that you see on the screen right now. The link on the screen to apply. Applications close on the 20th of August. And yeah, if you have any questions about it, feel free to email me. That's joseph@dfslab.net. But I'm fairly positive, like, you'll have all the information you need on the website. So please feel free to apply. We're looking forward to having you during the event.
Great. Yeah, thanks everyone. So obviously, as Joseph said, you can visit that link on the screen to find out more. You can email joseph@dfslab.net. Applications, as it says, close August 20th. And our goal here is to sort of help support and incubate projects in Africa that are focused on fintech solutions that solve real world problems. And that's the end. I really want to say that it was a real privilege to have all 4 of you here. Thank you so much. I know that we just scratched the surface, but I feel like we started to get into some interesting areas and to talk about what's going on in the region and integrations. And also, I think there was some really interesting nuggets for people who are interested in building their own companies or scaling their own companies. So I really appreciate it. And I hope that everyone out there listening also came away with something. We do plan to have more of these ecosystem roundtables in the future. So you can always find out more about those by just going to stellar.org/events. Thanks everyone for participating and for watching. Bye.